Okay, let's start with question number 6. So in 2019, Easy Company incurred 925,000 to manufacture 1.35 gallons of shampoo mixture. Okay, so this company actually makes shampoo mixture that it sells to shampoo manufacturer at a price of 12 ringgit per gallon. Okay, the cost to manufacture 1 gallon of shampoo mixture. Class, can you add in this word mixture into your question? Is presented below. Okay, so this manufacturing cost that they've given to you basically is for 1 gallon of shampoo mixture. Okay, 1 gallon of shampoo mixture. So your direct material is 4 ringgit 50 cents, direct labor 340, variable MO 50 cents, and fixed overhead is 60 cents. So total, when you add up your total manufacturing cost, comes up to 9 ringgit per gallon of shampoo mixture. So the company is considering to manufacture their own brand of shampoo. So now the company is thinking whether should they just sell shampoo mixture or should they process further to make shampoo. Okay, if they process further means they are going to sell shampoo. If they do not process further, they will sell shampoo mixture. So if the company processes the shampoo mixture further, the company will incur an additional cost. Okay, so they've given you direct material will have additional 1 ringgit 90 cent. So you can straight away add in here 1 ringgit 90 cents. Okay, direct labor is 80 cents. So I straight away add it in 80 cents. Variable MO will increase 40 cents. So I add in 40 cents. No increase in the fixed overhead is expected. So that means 60 cent will remain as 60 cent plus 0. Okay, it will remain as 60 cent. No increase in the fixed overhead is expected. So the company can sell the, class, can you change this word from hair dye, change it to shampoo. Okay, change this word. The company can sell the shampoo at 15 ringgit per gallon. If they sell shampoo mixture, it is 12 ringgit per gallon. If they sell shampoo, is 15 ringgit per gallon. So let's look at what the question wants. So determine the incremental per gallon increase. So later we will do per gallon in net income and then total increase in net income. So after we get per gallon, we just times lah, okay, to get total increase in net income. If the company manufactures the shampoo with no loss in weightage from shampoo mixture, no loss in weightage, that means you have 1.35 gallons of shampoo mixture. You will also get 1.35 million gallons of shampoo. That means no loss in weightage. The same amount of shampoo mixture will yield the same amount of shampoo. No loss in weightage. Same quantity. 1.35 gallons, 1.35 gallons. Okay, so they assume that there is no changes in the in the total quantity, yeah, okay, of your output. Okay, so let's go through your incremental analysis. So as usual, please remember to put in your company's name. Put in your company's name. So you have incremental analysis. So proposal to sell or to process further your shampoo mixture. Now your proposal is, do you want to sell or do you want to process further the shampoo mixture? So if you sell, you are going to sell shampoo mixture. That means all this while you have been selling shampoo mixture. So this is your original decision to sell shampoo mixture. But if you decide to process further, then you are going to sell shampoo. Okay, if you process further, that means you are going to process further the mixture and you are going to sell shampoo. So now we want to decide, do you want to remain as your old decision, shampoo mixture, or do you want to proceed to the new decision, which is to sell shampoo? So your calculation will be revenue, or we can put selling price also can. Then less all of your manufacturing cost, and you will get net income. Okay, so let's do in per gallon. Okay, per gallon the numbers are smaller. Then later on at the end you can times the quantity and you can get total. Okay, let's go for the first one. Revenue. Kun Pak, what do you get? Revenue. If you are going to sell shampoo mixture, what is your selling price? Selling price for shampoo mixture. Kun Pak. Okay. Per gallon, give me per gallon. So if you sell shampoo mixture, what will be your selling price? How much can you sell per gallon? Per gallon of shampoo mixture, how much? Correct, 12 ringgit. So you can get 12 ringgit from the top here. It says that they can sell the shampoo mixture at a price of 12 ringgit per gallon. Okay, so your selling price will be 12 ringgit. Don't forget your RM, 12. Okay, if you sell shampoo mixture, what is your direct material? Yuja. Shampoo mixture, you're not going to process further yet. Shampoo mixture, correct, 450 you can get from the top here. Direct material is 4 ringgit 50 cents. Okay, next one, direct labor Inyakani. Direct labor. Direct labor Inyakani. You are going to sell shampoo mixture. So what is your direct labor? Are you there, Inyakani? Okay, now mind, we move on. Jasmine? Jasmine, what do you get for your direct labor? What do you get for direct labor? Correct, 3 ringgit 40 cents, which is here. Direct labor, 3 ringgit 40 cents. Okay, what is the next item and how much? Kelly, the next item, what should I put here? And how much if I sell shampoo mixture? Correct. Variable manufacturing overhead. So class, you need to use the word overhead, not cost. Okay, variable manufacturing overhead, correct. And then 50 cents, correct. You can get from the top here, 50 cents. Okay, and the last item, what is it and how much? Lydia. What is it and then how much? Correct. Fixed manufacturing overhead. Fixed manufacturing overhead, and then it is 60 cents. Okay, correct. 60 cents you can get from the top here, 60 cents. So to get your net income class, you just take your selling price. Take your selling price and then less all of your manufacturing costs, you will get your net income. Kawei, what do you get net income? Correct, 3 ringgit. RM, 3 ringgit. Okay, let's move on to process further. So now we are going to process further the mixture and sell shampoo. What is your revenue? Wei Song. Revenue, now you're going to sell shampoo. Correct, 15 ringgit. Here, you can sell the shampoo at 15 ringgit per gallon. Okay, 15. What is your direct material? Hui Min. Direct material, so it increases a bit. Correct, 6 ringgit 40 cent. You can get from here. 4 ringgit 50 cent and then increase 1 ringgit 90 cent per gallon. So total you will get 6 ringgit 40 cents. Okay, next one, direct labor. Jawan. Correct, 4 ringgit 20 cents, which you can get from here, 3 ringgit 40 cents and then increase 80 cents. So per gallon, direct labor is 4 ringgit 20 cents. Okay, next one will be your variable overhead. Shiyun. Correct, 90 cents. Same thing you can get from the top here, 90 cents. And last one will be your fixed overhead, 1 roll. Fixed overhead. Correct, 60 cents. Because it says here, no increase in fixed overhead is expected. No increase in fixed overhead is expected. So 60 cent, there's no increase for 60 cent. So if you sell, you have to incur 60 cent. If you process further also same, you need to incur 60 cent. So same thing, take your selling price and then minus all of your costs, you will get your net income. So Hui Sin, what do you get net income? Correct, 2 ringgit 90 cents. 2 ringgit 90 cents. You take your revenue, less all of your cost, you will get 2 ringgit 90 cents. So now let's do your net income increase and decrease. First one, revenue. What do you get, Wenjia? Revenue. This one is 15. So what do you get? Correct, 3 ringgit. So how you get 3 ringgit? You compare 12 ringgit and then it increased to 15 ringgit. Do you see? 12 ringgit increased to 15 ringgit. So when revenue increase, net income also increase. So positive figure. Okay, again, so you compare 12 ringgit increase to 15 ringgit. Increase. So when revenue increase, net income also increase. Next one, direct labor, Ching Er. Correct. Decrease 1 ringgit 90 cent. Decrease 1 ringgit 90 cent. So if you compare your direct material from shampoo mixture, okay, here is 4 ringgit 50 cents. This is 4 ringgit 50 cents. Then it increases to 6 ringgit 40 cent. So 4 ringgit 50 cent increase to 6 ringgit 40 cent. So when this one is cost, this is cost. Cost. So when cost increase, net income decrease. Okay, when cost increase, you compare this to you will see that the figure increase, net income decrease. So negative 1 ringgit 90 cents. Okay, direct labor, Vala. Correct, decrease 80 cents because if you compare from shampoo mixture to shampoo, cost increase from 3 ringgit 40 cent to 4 ringgit 20 cent. Increase. Cost increase, net income decrease. Okay, cost increase, net income decrease. So negative 80 cents. Okay, next one, variable overhead, Umu. Variable overhead. Negative, correct? Negative how much? You compare these two, it also changes. 60 cents. This is 50 cents. Umu, variable MO, we're doing variable overhead. Variable overhead. Variable overhead. Correct, 40 cents. Okay. So if you compare variable overhead from 50 cents increase to 90 cents. From 50 cents increase to 90 cents. So when cost increase, your net income decrease. So negative 40 cents. Okay. Cost increase, net income decrease 40 cents. Okay, last one. Fixed manufacturing overhead, Kun Pak. What do you get for your fixed manufacturing overhead? 0, correct, because there is no changes. 60 cents here and 60 cents here. So net income increase or decrease is 0. Okay, last one, net income. Yujia, what do you get? Net income. So net income, you can either add up all the amount here. You can add up all of this. If it is in bracket, means you minus. Okay, if it is not in bracket, then you just add up. Or you can also compare this one, 3 ringgit and 2 ringgit 90 cents. Correct. You have a negative 10 cents per gallon. This is per gallon. Okay, if you compare 3 ringgit, your net income from 3 ringgit decreased to 290. So here it also decreased. 3 ringgit to 290 decrease. So your net income here will decrease, negative 10 cent per gallon. So just now the question says also they want total increase. So since we have already got our 10 cents, negative 10 cents, so we times with the quantity. Remember our quantity just 1.35 million gallons. Okay, so you just times, you will get total. Okay, total. So what is my decision, Inyakani? What is my decision? This is negative. So should I sell or should I process further? Inyakani, are you there? Okay. Process further. But Inyakani, this is negative. Negative. The final answer is a negative. If negative, we always go back to your original decision, correct, to sell. If it is negative, we always use back the original decision to sell shampoo mixture. If it is positive, then only we go to the new decision, which is to process further. So since this is negative, so decision is to sell. Okay, decision is to sell because net income negative, right? So net income decrease. This is negative. So decrease by 10 cents. Okay, you can put in 10 cents here per gallon, or you can put in the total amount also can. So decision is to sell shampoo mixture. Okay, any question? Okay, no. So we continue to the next question. Next question will be on repair or retain. Repair or replace. So Mike Corporation has a sphere lighting machine that is used by their engineers to test all the lighting designs and products that it produces. So the machine has a book value of 120,000 and a remaining useful life is 6 years. Salvage value is 20,000. Okay, at the end of 6 years. So the company is considering to change to a second-hand, more efficient machine that is available at a cost of 180,000. So your new machine is priced at 180,000. They will have a useful life 7 years with a salvage value of 30,000. Okay, at the end of 7 years. The new machine is expected to be able to lower the annual designing cost. So this question, they gave you annual designing cost. So class, you should look at what the question gives you. If they give you operating costs, then you use operating costs. If they give you administrative costs, then you use administrative costs. But in this question, they gave you designing cost. So in your answer, you need to use back the same one, designing cost. From 250,000 to 180,000. So it says the new machine is expected to be able to lower the cost from 250,000. That means this is the old machine. The old machine incurs much cost. The old machine will incur more cost, 250,000 more cost because it is less efficient. So from 250,000, which is the old machine, to 180,000. This is the new machine. So if you look here, the new machine is more efficient compared to the old machine, 250,000. Okay, before we start, I have a question. Book value, 120,000. Do you need to use this? Jasmine, do you need to use this and why? Book value of 120,000. Correct? No. You don't need to use this book value. So why? Correct. It's a sunk cost. Book value is a sunk cost. Book value, you get book value when you take the cost of the product and you minus your depreciation, right? You take the cost of the product and then you minus all your depreciation. So that means to get your book value, you actually purchased the machine many years ago. So it's actually a sunk cost. It's irrelevant. Irrelevant. So this item will not affect your current decision. So remember, class book value is irrelevant. So prepare an analysis to show whether the old sphere machine should be retained or replaced. So as usual, class, put in your company's name. Put in your company's name. So incremental analysis, proposal 2. You can get it from your question. Proposal 2, retain or replace the old sphere lighting machine. Proposal 2, retain or replace the old sphere lighting machine. So now your decision is, do you want to retain the old machine or do you want to replace it with a new machine? Okay, so let's do old machine first. Okay, under old machine, what will be your designing cost? Kelly, what will be your designing cost? 250,000. Okay, 250,000. This is for 1 year, annual. So the machine can be used for how many years? 250,000 is annual, 1 year only. So the old machine can be used for how many years? 1.75. 7 years. 7 years is the new machine. 7 years is the new machine. I'm talking about the old one first. Old one. Correct. 1.5 million. Correct. Your designing cost is 1.5 million. Okay, how to get 1.5 million? Your old machine designing cost per year is 250,000. And your old machine, they say here, the machine has a useful life of 6 years. So 6 years. So 250,000 times 6 years because 250,000 is only 1 year. Okay, so times 6 years. So you will get 1.5 million. Okay, next. If you are going to retain the old machine, do you need to buy a new machine? Next is Lija. What will be the amount here? 0, because you don't need to buy new machine. You are going to retain your old machine. So 0. Okay, salvage value, Kawei. If you are going to retain your old machine, are you going to sell this? Your salvage value, what will it be? Kawei. Zero, correct. Okay, because you are not going to sell. You are going to retain. You are going to keep your old machine. You are not going to sell. So salvage value, 0. Okay, so since this is cost and this is cost, salvage value is a revenue. Okay, so you just add up and you get total cost. Okay, total cost. Okay, now let's do replace. So replace, what is your designing cost? Wei Song. Designing cost for new machine. 1.26. Wei Song, you use 7 years, is it? Do you use 7 years? Yes, okay. If you use 7 years, we cannot compare because one is 6 years and then the other one is 7 years. So we cannot compare because two different number of years. So what we can do, we make it the same. So we take the lower one. We take the lower one because the old machine cannot go until the 7th year. So we take the lower one. We compare to 6 years, correct? So you take 180,000 and then you times 6 years. We take the lower one, correct? 1.08 million. 1.08 million. Next one, if you want to replace the machine with a new machine, you need to buy the new machine. So how much is your new machine cost? Hui Min. Correct, 180,000 given here in the question at a cost of 180,000. 180,000. Okay, next, you are going to sell off your old machine because you are going to buy the new one. So, Jiawen, how much? 30,000. But 30,000 is the new machine. If you sell off the new machine, then you got no more machines. Normally, when we sell the salvage value, we sell off the old machine. And then we buy the new machine. So, correct, 20,000 because we sell off the old machine. 20,000. Okay, so class, this 20,000, you can either put a bracket or you can decide not to put a bracket. It's up to you. The reason why some in your slides they put a bracket is because we want to calculate total cost. So this is cost, no problem. So you add. This is also cost, no problem. So you add. But salvage value means you sell the things and you get money. So it is a revenue. It is a income. That's why they put a negative here. So that you will remember this is add, and this is minus. Okay, but if you decide not to put, also no problem, class. If you decide not to put, also no problem. So you just remember later this one, you need to minus. Okay, you just need to minus this 20,000. Because this is cost, designing cost. This is machine is also cost. And finally, you want to find cost. But salvage value, this one, you receive money. You receive the salvage value. So it is a revenue, or we call it an income. It is an income. Okay, that's why in your slides they put a negative, they put a bracket. Okay, give me your total cost. Give me your total cost, Shiyun. 1.24 million, correct? 1.24 million. Okay, 1.24 million, correct. Okay, let's do our net income increase or decrease. Let's look at the first one, cost, designing cost. One row. Designing cost. So you compare from the old machine to the new machine. So your net income increase or decrease. One row. $420,000. Your amount is correct, but your symbol is wrong. Okay, this is 1.5 million. Okay, but when you come here, it becomes 1.08, right? Do you see reduce from 1.5 reduce to 1.08? So cost decrease, net income opposite direction. Cost is opposite direction. So this one is 1.5 million decrease to 1.08. So cost decrease. So net income opposite direction. Net income increase. Correct. Positive figure. 420,000. Okay, positive. Next one, new machine cost. Hui Xin. Correct, negative, because from 0 increase to 180,000. From 0 increase to 180,000. So cost increase, net income decrease. Negative 180,000. Next one will be salvage value, Wenjia. Correct, 20,000 positive, because from 0 increase to 20,000. From 0 increase to 20,000. So when revenue increase, net income increase in the same direction. Revenue increase, net income increase the same direction. So positive 20,000. Okay, what will be your final answer, Ching E? Correct, increase 260,000 RM. Correct. So one way to do this, you can add up all this amount. If it is in bracket, then you minus. If there's no bracket, then you add up. Or you can also compare these two. So this is cost. So cost decrease. You compare these two, you will see that the cost reduce. You compare these two, you will see cost reduce. So net income increase. Okay. So cost reduce, net income increase. So what is my decision? Vala, what's my decision? Correct. Decision is to replace, because this is positive. So if positive, we will choose the new decision. Replace the equipment with a new equipment. So decision is to replace the machine because net income increase, then you put this amount 260,000. Correct. Well, last sentence is also correct. Replace because net income will increase up to 260,000. Correct. So any question? This is using total cost class. Later I will show you another one using income. Using total income. A little bit different. Are you okay with this question? Question number 7. Okay. So we move on to question number 8. So GoWare Berhad uses various types of vehicles to provide transportation services to their customer. So recently, one of the minivan. So now they are going to talk about minivan. One of the minivan has been breaking down various times and it has resulted in significant amount of delay, excessive repair costs and dissatisfied customers. So the management is considering to replace the minivan with a new minivan. So they have presented the data below for 2 minivans. So you have the old minivan and you have the new minivan. So your old minivan book value 93,000. So remember book value is a sunk cost class. Book value is a sunk cost because it records past history. Okay, when you bought the old minivan many years ago. So this is a sunk cost. Okay, new minivan. This is important because you need to know how much you need to pay for the new minivan. Okay, estimated useful life, same, both is 3 years. 3 years for both. Next one, salvage value, you have 20,500 for old and new minivan 30,000. Okay. So it is estimated that the new minivan will produce an annual cost saving. Okay, so this is a slightly different. Annual cost saving, that means they can save costs. So when we say that you can save costs, it becomes a income. When we say that you can save costs, annual means yearly. Every year they can save the cost of 65,000. That means the new minivan can save 65,000 every year. Okay, again, the new minivan can save 65,000 every year. That means the old minivan cannot save. Cannot save. Okay, only the new minivan can help to save up to 65,000 a year. The old minivan will not be able to save this 65,000. Okay, so the old minivan is less efficient compared to the new minivan. The old minivan is less efficient. So the question says, determine whether the company should purchase the new minivan. So as always, put in your company's name, proposal to retain or replace the old minivan. Proposal to retain or replace the old minivan. Again, proposal to retain or replace the old minivan. So your calculation will be a little bit different, class. Okay, a little bit different because this one is annual cost saving. So when we talk about annual cost saving, it is a income. Okay, because you are able to save cost. Instead of spending that money, you are able to save cost. So it is considered an income. New minivan cost is a cost and salvage value as usual is a income. So you have two income and one cost. So at the end, we will use total income. Okay, so different from just now. Just now is total cost. So since here we have two income, cost saving and salvage value. So we use total income. Okay, so let's start with old minivan. So old minivan, what is your cost saving? Umu, old minivan, what is your cost saving? Annual cost saving. Are you able to save anything? 250,000. Is that the purchase price? We're talking about annual cost saving. Annual cost saving. 265,000. How do you get that amount? 65,000. Okay, we do our old minivan first, class. We do old minivan first. So for old minivan, your annual cost saving should be, are you able to save anything? You look at the question. The new minivan can save 65,000, but the old cannot, correct? No. So your annual cost saving for old minivan is 0. You cannot save anything. Old minivan cannot save anything, so 0. Okay, if you want to retain the old minivan, what is your new minivan cost, Kun Pak? Is there any new minivan? If you're going to retain your old minivan, are you going to buy new one, Kun Pak? No, so 0 lah. Okay. So if you're going to retain your old minivan, any salvage value, Yujia? Any salvage value? No, also correct, 0. Because if you retain your old minivan, that means you are not going to sell off anything. So 0, you're not going to sell off anything. So 0. So same thing, income you add up and then you get your total income. Okay, next one, we talk about replacing your new minivan. Okay, first one, annual cost saving for new minivan. Ini akan ni? Annual cost saving for new minivan. 65,000. Okay, 65,000 is 1 year, annual, 1 year. So what do you need to do? Correct, times 3. Because useful life is 3 years. So 65,000 is 1 year. Useful life is 3 years. So you need to times 3. Okay, times 3. Correct, 195,000. Correct. 195,000. So just now 0, right? Class for all minivan 0. Same thing. 0 times 3 years is 0 lah. So you still can compare. 0 times 3 years is 0. Okay, then 65,000 also times 3 years. You will get 195,000. So it is comparable. Both is in 3 years. Okay, useful life. Next one, your new minivan cost. Jasmine? New minivan cost. Correct? 285,000. You can get it at the top here. 285,000. New minivan cost. And last one, your salvage value. Kelly. Salvage value. Which one do you sell? The old minivan or the new minivan? Which salvage value? Old minivan or new minivan, Kelly? Correct, the old one. So your salvage value will be 20,500. Okay, because here you are going to replace. Replace means you are going to buy the new minivan. So you cannot sell off the new minivan, class. You sell off the old minivan. So here you sell off the old minivan. Okay, 20,500. So since they want total income, your annual cost saving you add. This one is a minivan cost, so you minus. And salvage value is a income, so you add. So what is your total income, Li Jia? 480. No. Okay. Li Jia? Correct. Old one will be 0. What about the new one? The new one, what do you get? What is the total income? Correct. It's a negative. Okay. So if you look at the figure, you will get a negative 69,500. Okay. So basically, it is negative because your new minivan cost is very high. Your new minivan cost here is very, very high. Okay, let's do our last one. Net income increase or decrease. Let's look at the first one. Annual cost saving. Annual cost saving. Kawe. Correct, negative, negative. Cost saving is income. Cost saving is an income. So income increase from 0 to 195. Correct. So it is positive because income increase, net income also increase. So positive, positive 195. Okay, new minivan cost. Wei Xiong. New minivan cost. This is cost. Correct, negative, because from 0 become 285,000. So net income decrease because this is cost. So cost is opposite direction. So negative 285,000. Okay, next one, salvage value. Hui Min. Income also. Correct, 20,500 positive because from 0 increase to 20,500. So income increase, net income also increase. Okay. So what is your final answer, Jawan? So how to get, you can just add up these figures, or you can compare these two. Total income decrease, correct. Negative 69,500. Okay, so if you want to compare these two, you will realize from 0, it become a loss, negative. From 0, it become a loss, negative. So, same thing, your total income will also be negative. Okay, so Shiyun, what is your decision? Negative. Negative. So, should you retain or should you replace? Negative. Correct, retain. Because negative, you use back the original decision, which is to retain. So decision is to retain the old minivan because then you use, correct, decrease 69,500. Net income decrease 69,500. Okay. So any question on this one? So you will see two different ones. One is cost, one is total income. Two different methods of doing this question. Okay, anything you want to ask? Okay, if not, we will go for a short break, 5 minutes. Later, we will continue to question 9 and 10. Okay, 5 minutes short break. Okay, thank you. Welcome back. So let's continue with question 9 and 10. Okay, let's look at question 9. So question 9 and 10 will be on continue or eliminate. Okay, continue or eliminate. So the accountant of Good Old Limited has provided the following information, and according to the accountant, the perfume department should be eliminated. So the accountant is saying that the perfume department should be eliminated as it is operating at a loss. So that means we are only looking at the perfume department. So we don't want to look at other departments. This one all are okay. Do you see it is at a profit? Okay, they are earning a net income of 1.97 million. So no problem, other departments. The problem is with perfume department. So our decision is to continue or to eliminate this perfume department. So the other division's cost of goods sold is 80% variable, operating expenses 60% variable. So this one, we don't need to look at this because it is other division. Okay, now we want to look at this one, perfume division. So cost of goods sold is 25% fixed. Cost of goods sold is 25% fixed. So cost of goods sold is 25% fixed. That means the remaining will be variable, which is 75%. Okay, 25% is fixed according to the question. So the remaining 75 will be variable. Next one, operating expenses 40% is fixed. So operating expenses 40% is fixed and the remaining will be variable, 60% variable. So from this question, you will be able to determine how much is fixed. Okay, given in the question is the fixed portion. And then you just minus 100% minus the fixed portion, you get variable portion. Okay, so the instruction, one more sentence. If the division is eliminated, that means if perfume division is eliminated, only 15,000 of fixed operating costs will be eliminated. Only 15,000 of fixed operating costs. That means fixed cost of goods sold cannot be eliminated. Only 15,000 of fixed operating costs will be eliminated. So the question asks you, do you concur with the accountant's recommendation? Do you agree with the accountant's recommendation? So present a schedule to support your answer. So as always, remember to put in company's name and then proposal to continue or eliminate the perfume department. Proposal to continue or eliminate the perfume department. Okay, so in your calculation, normally for continue and eliminate, we will use the contribution margin method. So contribution margin means sales less all your variable costs, you will get contribution margin. Then you less all your fixed costs, you get total income. So the reason why we normally use contribution margin method is because we want to see what is your variable portion. So normally if you eliminate your variable portion is 0 and we want to see what is your fixed portion and what we can or what we cannot reduce. So when we do continue and eliminate, normally we will use the contribution margin method. Sales less variable cost, you get contribution margin, then you less your fixed cost. Okay, so now let's do continue first. Continue. If you continue, what is your sales? One row, what is your sales? If you continue, what is your sales here? We are talking about perfume only, correct? 258,000. If you continue, we're talking only about perfume. Class, don't look at any other divisions. We look at perfume. So 258,000. Okay, next, I want to less variable expenses. So let's talk about cost of goods sold first. Hui Xin. Cost of goods sold. How much will be your cost of goods sold? Variable cost of goods sold. Correct. 142,500. So how you get that? 75% of 190,000. 75% of 190,000. So you will get 142,500. So class, don't forget your calculation. So this is 75%. 75%. So remember, you can do your calculation, put a and then you put your A at the bottom. So you have 75% times your total cost of goods sold, 190,000. So what do you get? Okay. Next one, operating expenses. 问价. Correct, 52,800. 52,800. So how to get that? 60% of 88,000. 60% of 88,000. So you will get 52,800. So this is 60%. Okay, 60%. Next, sales less variable expenses. So what do you get for your contribution margin, Qing Er? Sales less your variable expenses. Correct, 62,700. Contribution margin 62,700. Okay, next, your fixed expenses. Let's go to the first one. Cost of goods sold. Voila. Cost of goods sold. Fixed cost of goods sold. Correct, 47,500. So just now at the top here is 75%. So at the bottom here will be the remaining 25%. Okay, so your fixed cost of goods sold, you can look at the question. 25% of 190,000. 25% of 190,000. So you will get 47,500. And the last one will be your operating expenses. Umu. Operating expenses, fixed operating expenses. So how much do you get? So just now variable is already 60%. So your fixed operating expenses should be the remaining 40%. So how much do you get? Oh, your number very big, lah, Umu. 40%. 40% of your operating expenses. 40% of your operating expenses. Your fixed portion is only 40% because just now you have already used 60%. So your 40%, how much do you get? Correct, 35,200. 35,200. Okay, 35,200. So now after you minus off, you will get your total income. What do you get, Kun Pak? Your total income, what do you get? Negative 20,000. Don't forget your RM. Okay, negative 20,000. So if you realize, actually your final answer, your total income is the same as your question. Do you realize it is the same? Negative 20,000, negative 20,000. The only difference is your cost of goods sold and operating expenses you split up. Do you see at the top here it is cost of goods sold one number, operating expenses one number. So you rearrange it, you put it variable portion together, and then you get contribution margin, and you put fixed portion together. So you should get back the same answer, class. This is how you check. You should always get back the same answer, because if you continue that department, you should get back the same answer. Okay. Now let's do eliminate. If you eliminate, what is your sales? Yujia. If you eliminate, what is your sales? Zero, correct. If you eliminate perfume, sales zero. Variable cost, Inyakani. If you eliminate, what is your variable cost? Zero also, correct. Okay, no sales, no variable cost, contribution margin also zero. Okay, let's go to your fixed cost now. So your fixed cost, first one, cost of goods sold, Jasmine. Correct, 47,500, because all of it cannot eliminate. So whatever that cannot be eliminated, you need to include in. So the question didn't mention that you can eliminate anything. So that means the whole thing cannot eliminate. 47,500. How about operating expenses, Kelly? 15,000. Okay, we look at the question. 15,000 of fixed operating expenses will be eliminated. Will be eliminated means can eliminate. Can eliminate. Will be eliminated means you can eliminate. But Kelly, this portion is cannot eliminate. Cannot eliminate. So how much? 15,000 is you can eliminate. But here is you cannot eliminate. So how much do you get? Correct, 20,200, because that amount cannot be eliminated. So that means that even if you eliminate perfume, even if you eliminate perfume department, you still need to pay for all of this. That is what it means by cannot be eliminated. Even if you eliminate perfume department, you eliminate away the department, you still need to pay for all of these fixed costs. That means cannot be eliminated. You must pay for all of these fixed costs. Maybe it is machine depreciation, maybe it is building depreciation, and so on. Okay, so you calculate, and then you should get your total income. What do you get? Total income, Lydia. Correct, negative 67,700. Negative 67,700. Okay, let's do your net income increase or decrease. First one is sales. Kawe. Sales. 258,000. Positive or negative? Positive. Positive. Okay, here is 258,000, right? This is 258,000. And then it becomes 0. So sales decrease. Do you see from 258,000 decrease to 0. So net income will sales decrease, net income move in same direction. Correct. Decrease. Sales decrease, net income decrease. Okay, if it is cost, then only opposite direction. Cost decrease, net income increase. Okay, class. Sales or revenue increase, net income increase. It moves in the same direction. But if for cost, it will move in a different direction. Cost increase, net income decrease. Different direction. Okay, different direction. So just now sales from 258,000 decrease to 0. So here also decrease lah. Negative. Kawin negative ah. If you put positive, it will change your final answer later. So negative ah. Okay, next one. Variable cost of goods sold. Next will be Wei Song. Correct. 142,500 because from 142,500 become 0. So cost decrease, net income increase. So positive 142,500. Okay, next one, operating expenses. Hui Min. Correct. Positive 52,800. So same principle. Okay, your cost decrease, net income increase. So 52,800. Okay, contribution margin. Jawad. Contribution margin is an income. It's an income. Income. From 62,700 becomes 0, Jawad. From 62,700 becomes 0. So income decrease. Net income? Positive or negative? Negative, correct. Okay, because contribution margin is a income. So negative 62,700. Negative. Okay, next one, fixed cost of goods sold. Shiyun. 0, correct, because no changes. And last one, operating expenses, one row. Operating expenses, correct, 15,000. Okay, operating expenses reduce. So net income increase, 15,000. Last one, what is your total income? Hui Sen. So 0. What is your final answer? Hui Sen. Negative 47,700, correct. Negative 47,700. So one way to calculate is from contribution margin to fixed expenses. Okay, you just add up negative 62,700 plus 15. Or you can compare these two. Do you see your net loss? Your total loss became even worse. Your total loss became even worse. It dropped even more when you eliminate. So, negative 47,700. Okay, Wenjia, what is your decision? Negative. Correct. Good old limited should continue. Correct. Should continue because net income decreased 47,700. Okay, class, another way to write it. Remember your decision rule. Correct, Lijia. I do not concur with the accountant's recommendation. Correct. So you answer this one. You do not concur with the accountant's recommendation. The company should continue operating the perfume division because net income decreased by 47,700. Correct. Lijia, correct. Wenjia's one also correct. Lijia's one also correct. Okay, welcome. So another way to write it is decision is to continue because remember the decision rule? Fixed cost eliminated, which is here, this one. Fixed cost eliminated is 15,000 is less than contribution margin loss, which is here. 62,700. So class, just look at the numbers. Don't look at the negative or positive sign. Just look at the numbers. Which is bigger and which is smaller. Don't look at the positive or negative sign. So you can write it like this also. Can. Decision is to continue because fixed cost eliminated 15,000 is less than contribution margin loss 62,700. Okay. Any question? So let's move on to our last question, number 10. So Nucas has two divisions, the Mi division and also the Mi Hun division. So the company is considering to dispose the Mi division. So Mi division, as it has been consistently unprofitable for a number of years. So the income statement is given as below. So you have Mi, you have Mi Hun. So we don't need to look at Mi Hun because Mi Hun has no issue. So now your decision is, do you want to continue Mi or do you want to eliminate Mi? So in Mi division, 85% of cost of goods sold and 70% of selling and admin is variable cost. 85% of cost of goods sold is variable. So 85% variable. And the remaining one will be fixed, which is 15%. Okay, 70% of selling and admin is variable. So 70% variable and 30% is fixed. So the management of the company feels that it can save 17,000 fixed cost of goods sold and 12,500 fixed selling and admin expenses if they discontinue Mi division. This word, it can save. It can save means you can eliminate. It can save means you can eliminate. You can reduce it. So they ask you to determine whether the company should discontinue the me division. So as usual, put in your company's name. Proposal to continue or eliminate the me division. Proposal to continue or eliminate the me division. Okay, so as usual, we are going to put it into variable and we're going to put it into fixed. Okay, so let's do continue first. What is your sales? 金额. Okay, 260,000, correct. You can get the amount from the top here, 260,000. Less variable cost of goods sold. Vala. Variable cost of goods sold. Correct, 164,050. 85% of cost of goods sold. 85% of cost of goods sold. So this is 85%. Okay, variable selling and admin, Umu. Variable selling and admin. Variable selling and admin. 28,950. Umu, variable selling and admin. Variable selling and admin. We are doing variable cost first, huh? So variable selling and admin. Correct, 52,500, which is 70% of 75,000. 70% of 75,000. 70%, okay. So sales less variable expenses, you get your contribution margin. Kun Pak, what do you get contribution margin? Correct, 43,450. Okay, next we move to fixed cost. What is your fixed cost of goods sold? Yuja. Just now you use 85%. So now you use the remaining 15%. So what do you get? Yuja. Just now you use 85%. So now you use 15. Correct. 28,950. 28,950. Okay, selling and admin. Ini akan ni. Just now you use 70%. So now you use the remaining 30%. How much? Correct, 22,500. 22,500. So if you add up 85%, 15%, you get 100% cost of goods sold. 70% plus 30% is 100% selling and admin. So what is your total income, Jasmine? Correct. Negative 8,000. Okay, so as usual, class, this one, we need to compare to your original question. Correct. It is negative 8,000. So we only rearrange inside. We break it off to variable, we put it together, and fixed, we put it together. So it's just the way of displaying your items. We just change the position of it. So you should get back the same net income. Okay, now let's go to eliminate. If you eliminate the me division, what is your sales? Kelly, what is your sales? You want to eliminate the me division. What is your sales? 0, correct. What is your variable expenses, Lydia? 0 also, correct. So, sales 0, variable expenses 0, contribution margin 0. Okay, contribution margin 0. Next, we go to your fixed expenses. So remember, this column is for those that you cannot eliminate. That means if you eliminate me division, you still need to pay all of this. If you eliminate the me division, you still need to pay all of this fixed costs. Okay, so first one, cost of goods sold. How much do you get, Kawi? 17,000. But Kawi, 17,000 is can eliminate. 17,000 is you can save. It can save means you can eliminate. But this column I'm talking about cannot eliminate. Your figure is very big. Kawi, your figure is very big. So how you should find is you take your fixed cost of goods sold. This is your total fixed cost of goods sold. And then you minus off your can eliminate, minus off this one. What do you get? You take your fixed cost of goods sold. Then you minus off this one is you can eliminate. So once you minus this, you will get cannot be eliminated. Correct, Kawi. 11,950 cannot be eliminated. Okay, you take your fixed cost of goods sold and then you minus off the one that you can eliminate. The one that you can eliminate. Then you will get the cannot portion. Okay, next one, selling and admin. Selling and admin. What you saw? What do you get? Correct, 10,000, 10,000. So same principle, you take your fixed selling and admin, and then you minus off the can eliminate. Minus off the can eliminate, you will get the cannot portion. Okay, 10,000. Okay, next, calculate your total income. Calculate your total income. Hui Min, what do you get? Total income? 100 and... Your figure is very big. do you mean here? What is your total income? Your contribution margin is 0, right? Ah, correct. Negative 21,950. Yeah? So if you eliminate me, your total income is negative 21,950. Okay, next let's look at your net income increase or decrease. Okay, first one, sales. Sales. Jiawen? Sales? Correct, negative 260,000. Because here is 260,000. Then when you eliminate become 0. So sales decrease, net income decrease. Okay, same direction. Sales decrease becomes 0. So net income decrease. So negative. Next one, variable expenses, cost of goods sold. Shiyun? Correct, positive, because from 164,000 and then become 0. So cost decrease, cost reduce, net income increase. So opposite direction. So positive 164 and 50. Okay, next one, selling admin, one row. Correct, 52, 500, same thing. Your cost decrease to 0. So cost decrease, net income increase. Okay, cost decrease becomes 0 here. So behind your net income increase. So next, contribution margin. Remember, this is a income. Who is it? Correct, negative 43,450. Contribution margin is an income. So from 43,000 become here 0. 0. Okay, from 43,450 reduce to 0. So your net income also decrease. Or another way to calculate is you add up these two columns. Plus you add it up, you should get the same answer. Okay, next one, fixed cost. Wenjia, fixed cost of goods sold. Correct, positive 17,000 because your cost of goods sold decrease. So net income increase 17,000. And then the last one, fixed selling and admin, Ching E. Correct, 12,500 positive, same thing. Okay, so you have 17,000 and then you have 12,500. So calculate your total income, Vala. What do you get? You can either calculate from these two columns or you can compare from these two columns, which shows that your total loss became even worse. Correct, negative. Became even worse. 950. So if you compare, this one let me delete. So if you compare, do you see your total loss became even worse if you eliminate from negative 8,000 became negative 21,000, even worse. So your total loss is 13 950. So what is your decision, Umu? What is your decision? This is negative. If negative, we use the original one, Umu. What is your original decision? Negative. If negative, we will use the original one, correct, which is to continue. So, class, remember, if it is negative, we take the first decision, the original one. If it is positive, then only we take the new decision, the second decision. So, the decision is to continue because then you use the title, net income. Since it is negative, right? So you use decrease. Net income decrease 13,950, yeah? Okay, class, so you complete this sentence. And I want to show you the last one, okay? Decision, same decision. Decision is to continue because fixed cost eliminated, which is here. Fixed cost eliminated. Your fixed cost eliminated 29,500. 29,500 is lesser than contribution margin loss. Remember, class, do not look at your positive negative sign, just look at the numbers. This is 29,500. This is even bigger, 43,450. Okay, so that is your decision. So you can write either one, class.